Imagine you're at a market. You see two fruit stalls. One sells 50 apples at $1 each, total worth $50. The other sells 10 big apples at $5 each, total worth $50. Both stalls are worth the same, but which one is bigger? This is exactly how market capitalization works in the world of crypto and stocks. But how is market cap calculated? Why does it matter? And does a higher market cap mean a better investment? Let's break it down in simple terms. If you've ever checked crypto rankings, you've seen terms like Bitcoin, 2.2 trillion market cap Ethereum, 400 billion market cap Dogecoin, 50 billion market cap. But what does this mean? Market cap tells us the total value of a cryptocurrency. It helps investors understand which cryptos are big, medium, or small. Still confused? Don't worry, let's explain with an easy formula. What is market cap and how to calculate it? Let's take an example. Bitcoin is priced at $30,000 per coin, and there are 19 million Bitcoins in circulation. So Bitcoin's market cap equals 30,000 times 19 million equals 570 billion. Now compare that to Dogecoin. Dogecoin is priced at 10 cents per coin, but there are 140 billion Dogecoins in circulation. So Dogecoin's market cap equals 0.1 times 140 billion equals 14 billion. Even though Dogecoin has more coins, its total value is way smaller than Bitcoin's. This is why price alone doesn't matter. Market cap gives the full picture. Cryptocurrencies are categorized into three types based on market cap. One large cap cryptos, market cap over $10 billion. Bitcoin, Ethereum, Binance Coin stable, strong and widely trusted. Two mid-cap cryptos, market cap between 1 billion to 10 billion Solana, Avalanche, Chainlink, more growth potential but riskier. Three small cap cryptos, market cap below 1 billion meme coins, new projects, unknown altcoins, high risk, high reward investments. So before investing, always check market cap. So why do investors care about market cap? It shows stability. Large cap cryptos are less volatile. It helps compare cryptos. Price alone can be misleading. Market cap gives real value. It indicates growth potential. Small cap cryptos can grow faster but are also riskier. But here's the twist. Market cap isn't everything. There's another term, fully diluted market cap. This is the market cap if all coins were in circulation. For example, Bitcoin's supply limit is 21 million. Right now, only 19 million are mined. So the current market cap is $570 billion. But when all 21 million are mined, the fully diluted market cap will be $630 billion. Some cryptos inflate supply over time, which affects price. That's why investors check both market cap and fully diluted market cap before investing. A low-priced coin is cheap. No, price doesn't matter. Market cap does. A high market cap means no risk. Even big cryptos can crash. Always research before investing. Market cap stays the same. Wrong. It changes daily as prices and supply change. Market cap is a powerful tool for investors. It helps you compare cryptos, understand value, and avoid scams. But remember, always check circulating supply before judging a crypto. Don't just look at price, look at market cap. And never invest based on hype alone. Now I have a question for you. Which crypto do you think has the most potential in the future? Drop your answers in the comments. And if you found this video helpful, like, subscribe, and hit the notification bell for more crypto education. See you in the next video.